Welcome to the Trading Journal, guys, where we take high volatility stocks and make money trading them. Now, if you're new to the channel, we've been having an amazing month so far, where we take our small account and try to grow it as fast as possible. Today, we locked in over $1,345 trading ENTX and TURB. Lately, the market has been really slow, and today, there are only about a handful of tickers that made these really impressive volatile moves. Unfortunately, most of these tickers, when the market opened, just flushed down, not giving long traders and short sellers enough range to get in and get out and make some money. So today we're gonna break down the two trades that I took, so let's get into it. Welcome traders! Okay, so let's break down the first stock that I took, and that was TURB. Now TURB had some moderate news this morning, but if you actually look through the news and read between the lines, it was actually a whole lot of nothing, which is why I shorted the fade immediately. So let's get into the charts. If you look at TURB on the daily, you can see that it has a history of pumping and dumping. So you see on this day here, it made a really impressive push from about $1 all the way to $6.50, and it faded all the way back down to about $1.50. And lately, you can see that it's been consolidating in this $1.50 range. So when the push happened today, it hit a high of about $1.73, but I think on trade zero, it was actually about $1.90. And it immediately rejected. So I got in with a starter size in the 160s with the intention to cover below the $1.31 support. So let's break this down here. You can see this is about 140. Now I'm going to show you the trade zero chart here, and I drew the line at $1.32 because once it rejected, I expected this to fade below $1.32. Now my initial stats was telling me this one was probably going to hit about $1.10 to $1.20, but I recognized that once liquidity dried up, there was very little opportunity for this stock to continue fading, and that's what happened. So I took my first starter in the 160s, and on the flush, I waited for the pop, and when I saw this pop, I got in the $1.40s and $1.39, and after it faded, I immediately got out in the 120s and the low 130s. Unfortunately, I couldn't get all my position now. I was actually looking for a continuation move, but I recognized that liquidity had effectively dried up by 850. And when liquidity dries up, it's very difficult to get out of your position, so I got out. My worst exit was $1.37. My best exit was about $1.28. And you can see from my P&L, I made about $1,000 with an average exit price of about $1.31. Even right now, you can see it's $1.37 by $1.42 with no liquidity. So when there's no liquidity, you need to get out. And when you trade these types of setups, it's very important to understand liquidity, because that is the whole point of a move like this. This manufactured push, whether it was an algo push or it was news driven push, it had no liquidity. After this fade, you can see the subsequent candle dropped in volume. Like, the first initial push and fade happened about 1.1 million shares. The next candle, liquidity dried up to about 70,000 shares. So this push was manufactured to allow some people, we don't know who, but to allow some traders to exit. This manufactured push was definitely not going to work. We shorted into the fade, we added into the 130s and 140s, we got a little bit aggressive, and we recovered into the drop. So this was my first trade, which made me $1,000. And before I continue, I know you're going to look at my P&L and say, these two trades right here, these were misclicks. I don't know what happened to my keyboard or what happened to my computer, but it was just going crazy. Luckily, it was only 300 shares, so I only lost $6 each time, but it forced my exit on ENTX as well, but we'll get into that later. So the next stock that I traded was ENTX. Now, ENTX is a little bit weird because lately it had dilution news. It was moderately good, but overall, I think it was bearish. Investors and institutions were backing this stock by funding it, but there was a massive dilution event because this stock currently has about 50 million shares in float. But after the dilution event, I think it was going to balloon up into about a couple 100 million shares. It was a dilution, but they are getting money. So when penny stocks get money, it's very important because it actually shows somebody is willing to fund that company. Most of these penny stocks, as you know, will push up and fade back to nothing. So this one here was a little interesting because I didn't really look at the previous chart. I saw it this morning, and the first thing that I thought of was this candle right here. It made a push from about $1.24 all the way to $2.80 and right back down to $1.50. Typically, this move here is very bearish, but you can see what happened to the stock afterwards. It slowly grinds up on the daily, and everybody who shorted this stock here expecting this to fade back down are trapped. And with 50 million flow, we don't know how many people are actually trapped, but we know it's a lot. With that said, this morning it made a really impressive push from about $2 all the way up to about $3.80 in the pre-market. I'll show the 5-minute chart, and you can see this massive push. Now, when that happens, you cannot short this because the stock has been slow grinding in the last few days. On top of that, you'll also see that there was a really impressive push, about 100%, where it went up and gave back all of its gains. Now, when that happens, we know there are short sellers swinging this. But when it grinds all the way back up like this, it's very difficult for you to find out what level to short at. You need to wait for the push to happen. So I didn't want to get in aggressive on this stock. After this push to about $3.90, on the rejection, I contemplated shorting the 360 and 350, but I really didn't like the chart. If you want to draw support, now that we're looking at it, there's a massive consolidation 220. We can even draw one right here on 280s, and another one around this peak right here at 320s. So when that happens, where do we want to cover? If we're shorting in 360 and 350s, we have to risk the top at 390 and $4. But we don't have enough stats to back us up to say we should cover in the 320s or we should cover in the 280s, because the problem is this candle here pushed all the way to 280, came back down, slowly grinded back all the way back up, and you can see that the volume today is going to exceed the volume from June 26. So with that said, I just generally don't want to start analyzing and getting into really choppy stocks, because that's generally what this is. It's really choppy. You don't know where to get in, you don't know where to get out, and you can draw these levels, but you can see how it grind all the way back up after retracing the move back to the previous consolidation support in the 280s. I actually did short this stock. I went really small, and the reason why I shorted this stock was because in the 320s, I was expecting this stock to pop, to push back up, and when it didn't, I shorted into the 320s. So I think my fill was about 316 or so, and I was going to risk the top at 330. It was going to be a very small scalp because I wasn't sure what was going to happen. Once I got in, I noticed that the stock was defending this $3 level extremely well. I know this is 290, but this 290 to $3 level was defended extremely well. When it finally cracked, I got out. I knew it was going to crack, I just didn't know what level and how much. Because if I was wrong, my average was good enough that I can cover into a 330s, and I had enough cushion on the day to take the small loss. But you can see that on this chart, it's very choppy. It made a push all the way to 390, came back down to 280, which was support, pushed all the way back up to almost $4, got halted, made a massive doji, rejected all the way back down to 320s, and now it's grinding back up higher. What I've noticed with these high flow stocks is once they make these really impressive pushes and they have a big drop, they slowly grind back up, which is why I don't like holding on to these, especially like ENTX. So that's all for today, guys. I hope you guys enjoyed the video. If you do, please remember to like, comment, and subscribe. For a small YouTuber, this means a lot. And this is my trade for today. We made $1,345. I hope you guys learned something, and I will see you guys in the next video.